Hi, this is Tim Yoder with Fit Small Business, and today I'm going to talk to you about accounts receivable aging reports. So, what exactly is an accounts receivable aging report? It's a list of all of the amounts owed to you by your customers, separated out by whether the accounts receivable is current, meaning not yet due, or whether it's overdue. And if it is overdue, by how many days is it overdue? So, you can see in our sample accounts receivable aging summary, we separate our receivables by 30-day increments. So this is a pretty standard separation. So our current column would be everything that's not overdue, and then our 1 to 30 days is everything that's 1 to 30 days overdue, 31 to 60 days overdue, 61 to 90, etc. So we can notice here that Aaron actually has amounts in each column. This is because Aaron has multiple invoices outstanding. One of his invoices is current, while another invoice is $1,100, and it is over 90 days overdue. So again, accounts receivable aging report, a lot of useful information. If Paul's Plumbing had been using this effectively, they may have decided not to issue or not to make another $595 sale to Aaron when he still owes them $1,100. That's 90 days overdue. So good. So this is the basic setup of our accounts receivable aging report. When do you want to create these? I would recommend at least once a month, but honestly, you should probably do it more like weekly. And we'll talk about today how you can use this report to manage your business, and you'll see that it's going to be helpful if you look at it much more often than just once a month. So dealing with slow paying customers, it's not a fun task, but the most important thing in dealing with overdue invoices is to stay on top of it. It's not any fun. People tend to procrastinate. It's just going to get worse and worse. You need to address it constantly, at least every week, and this report is a really good tool in addressing it. So let's look at how we generate a accounts receivable aging report. So I'm going to use QuickBooks Online as an example. It is the most popular software, but just about every software I've reviewed actually has a accounts receivable aging report available. So let's pull up QuickBooks Online. And we're going to start here at our dashboard. So to generate an accounts receivable aging report, all we have to do is go over here to our left menu bar and click Reports. Then if we scroll down into who owes you, so these would be our accounts receivable. Now we have two reports. Let's first look at the accounts receivable aging summary, and this is the report we just looked at. So this is Paul's Plumbing. The debts are separated into 5 columns. We can actually adjust all of that. So right now we have 30 days per column, so it's the current column plus 4 overdue columns. We can actually change this to, let's say you want to look at it in 2-week increments. We could change that to 14 days and run the report. Well, that only gets us to 43 days and over. So perhaps we want to do 8 of these columns. Run the report. And there we go. So we have a lot of very good detail as far as how long each invoice is overdue. Okay, so this is our accounts receivable aging report. Again, the very common format is to have each column for 30 days and to have 4 columns, so we'll switch it back to that. Okay, good. So now the second type of accounts receivable aging report is the detail report, and you may like to work with this rather than the summary report, and the difference being is that this is going to give you each individual invoice. So again, we have Aaron here. Remember, he has one invoice that's way overdue, and that's going to show up here. So this is formatted a little bit differently. So instead of having them in columns, we have them grouped together. So these are all of our invoices that are 91 or more days overdue, and it shows that Aaron has 3 of them. And then we have a group for 61 to 90, 31 to 60, and 1 to 30. So again, same information, formatted a little bit differently, a little harder to look at in my opinion, but it has the benefit of having the invoices listed separately, which could be very important. Okay, so that's how we generate our accounts receivable aging report in QuickBooks Online. So now let's talk about how we go about using that to help us manage our company. Okay, so let's start with that first column, our current account columns. Is there anything we need to do? We want to keep an eye on that account, and as those invoices become very close to being due, we may want to send out a payment reminder. So you don't necessarily have to wait until after they're overdue to send a reminder, especially if you have a very long payment term. If you allow customers 30 days to pay, so it'd be a net 30 payment term. If you allow them 30 days to pay, it would not hurt at all to send a reminder email perhaps 7 days before the due date saying you have a payment coming due in 7 days. So that's what you want to do with your current account column. What about your first column of overdue? So 1 to 30 days past overdue. Remember, the key to dealing with these slow paying customers is to stay on top of the matter, constantly remind them. So you need to do that immediately with the 1 to 30 days past due. As soon as an invoice is 2 business days overdue, you need to call them or text them or email the client, just a very polite, very informal, hey, you may have missed the invoice. Could you make sure you understand you pay us, that you owe us, and you need to make payment quickly. So again, as soon as it becomes overdue, you need to send a message to the client, very polite, but the message needs to be sent. Once that invoice gets to about 14 days overdue, then you need to start a more formal collection process. There are a series of 4 collection letters that we recommend you send, and we actually have this in a separate article and video. I will throw a link in the description to this video so you can download templates for all 4 of these collection letters. But 14 days after the invoice becomes overdue is when that first collection letter should be sent. Once that invoice hits 30 days overdue, you need to send the second collection letter. So again, notice 14 days and 30 days here, we're grouping them in the same column in your typical accounts receivable aging report. However, you may want to redefine your columns like I showed you, so that you have one column for 1 to 14 days and one column for 15 to 30 days, so that you can very easily see when you need to send these separate collection letters. Once we get to 31 to 60 days past due, then we're getting a little bit more serious. You're going to send a third collection letter, and it's going to be a little more strongly worded. Again, I recommend you look at the other article we have on collection letters to get a template. You still need to be professional. Obviously, you never want to be rude, but you do need to make them understand that this is a serious matter. And once it becomes 60 days or more, it's generally considered a delinquent account. Your chance of collection at this point has gone way down, so you need to send them a 4th collection letter saying, if you don't pay this amount, this is what's going to happen. Spell out exactly what you plan. If you're lucky enough to be in an industry like roofing or construction industry where you can place a lien on the property, you need to tell them that in the 4th collection letter, that this is what's going to happen. You're going to have a lien placed on your property. So whatever your intended actions are, maybe your intended action is to turn it over to a collection agency, you want to make sure you tell them that in that 4th collection letter. So again, you want to really stay on top of the collection process, write these letters. Your accounts receivable aging report is a great tool for tracking invoices so that you get those letters off at the proper time. Okay, another great useful thing for the accounts receivable aging report is bad debts. So there are 2 ways that you can record bad debts. Now, the first way is generally accepted accounting principles, and it is the estimated bad debt method. So what you do is you look at your historical collection rates, and you apply those percentages to your current accounts receivable to estimate what you suspect will go bad in the future. So it has nothing to do with any individual customers that owe you invoices. It's purely based on averages. And the accounts receivable aging report is very useful because you can apply averages to each of the different columns. So your current column, you could say those are all going to be collected. 0 to 31 days, perhaps historically, maybe only 5% of those become uncollectible. Once you get out to your 90 days plus column, maybe 80% of those are uncollectible. So you could use your accounts receivable column to estimate what you think will go bad in the future, and that estimation procedure, that would be compliant with GAAP recording of bad debts. And so most small businesses actually don't have to comply with GAAP, and so if you don't have to comply with GAAP, I wouldn't do it that way. However, you may have a bank or an investor, some other creditor that requires you to follow GAAP. If you don't have to follow GAAP, I highly recommend the direct write-off method. And with this method, you don't write anything off as a bad debt until you actually identify a very specific invoice that you are no longer going to collect. So once something hits that 90-day plus column, if you're giving up, then you need to write it off. So you're not writing off an estimate of what might go bad in the future. You're writing off Aaron owes you money. It's 90 days overdue. You're never going to collect it, so you're going to write it off. Okay, that's the simpler way to handle bad debt write-offs, and as long as you don't have to comply with GAAP, that's a great way to do it. Now, I will throw out there, for income tax purposes, if you're a cash basis taxpayer, then you've never recognized any income for any of those amounts showing up on your accounts receivable aging report, right? Those are things that you have not received cash for. So if you are a cash basis taxpayer, you've never received the cash, you've never recorded the income. When you write off an invoice, it has no tax effect. There's no tax deduction because you've never claimed the taxable income to begin with. So I just always like to throw that out whenever we talk about bad debt expense, because taxpayers are often wondering why they don't see a bad debt deduction. Great. Well, my name was Tim Yoder at Fit Small Business. I hope this video helps you understand the Accounts Receivable Aging Report and how you can use it to manage your business. So again, I'm going to throw a link to QuickBooks Online in the description. If you don't already have a subscription, you can click there to get a free 30-day trial. I'll also throw a link in to the collection letter templates in a separate article from Fit Small Business. I hope you have a great day and that this video was helpful.